Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Well, good everyone. Thanks for joining us. It's always a pleasure to have you tuning in, dialing in to the Smart Property Investment Show. Obviously very excited as per usual, sharing stories of property investors right across Australia. In the studio today, I have Rita. We've managed to persuade Rita to come in. Rita doesn't want me to use her last name because she likes to keep her cards quite close to her chest and not give too much away, but she's got an impressive portfolio and a really good story. So I managed to persuade her to come in and have a chat with us. Rita has been at this game for a little while, investing in property, and I thought today we can try and get her to give us her little inside secrets, even though we're not going to know exactly who she is. If you listen to the show and you know her, you probably work out who it is, but just give us her view of the world, what she's up to, how she's doing it, and maybe what she thinks she could be doing better as a property investor, but also where she's headed. Rita, how are you going?
Good, thank you. Thank you for having me.
You not wanting to let too many people know what you're up to, that's cool. I get that. I understand that. A lot of people sort of play it that way. They don't, whether it's friends or families, whatever, they don't want them to know what you're up to, and that's cool. I outside of the Smart Property Investment Show, I keep my affairs pretty close to my chest, so I don't really, anyway, so I get it quite a lot. But why is it you're just happy just running your own game and not letting too many people know what you're really up to?
Yeah, I think sometimes people can judge you, and I've seen it happen to other people where they talk about, I guess, their personal finances and things like that, and opinions change for whatever reason, and I'm a pretty private person anyway, so cool. I don't really like to share too much, except with a close group of people.
Close group of friends. It's well, it used to be rude to talk about money.
Yeah, that's right. Exactly. That's right.
It's completely opposite. All we do is talk about money, but I think it's quite healthy to talk about money. Asking someone how much they earn is one thing, but that's probably still a bit rude. But I think people can learn a lot from understanding what other people are doing in terms of wealth creation, which is the basis of this show. So thanks for coming in to have a chat with us. So tell us a little bit about your story. How long have you been investing in property?
About 3 years now.
And has it been a good journey?
It's been a great journey. I'm loving every minute of it. If I could leave my job and do it full time, I definitely would. That's my goal.
Is that the idea at some point?
Yeah, pretty much that's the idea. So started 3 years ago looking for an investment property with my husband, my husband and I. And just sort of a bit nervous about the first one, not wanting to take out too much finance, a bit not very risk averse, or we are risk. What's a risk averse? Yes.
Don't like risk.
Yeah. Don't like risk, especially with a family. So you want to make sure that you're not making the wrong decisions for the future. So started with our first property in Victoria. We actually used a buyer's agent because, new to the game, definitely did not know what we were doing. So, and both working full-time, long hours, to be able to have the time to research and do our due diligence was just not something we could do at the time. So we invested in a buyer's agent who helped us find our first property. So that was in Victoria.
And that was 3 years ago?
That was 3 years ago.
So fast forward today, how big is the portfolio now? Just to give us some scope of speed.
So currently settling on our 7th property.
So you found it, you're just in the settlement period now,
Yes, so we've exchanged contracts, just now actually got our formal approval, and we're hopefully settlement this month.
Okay, well, we'll get into that in a second and understand what's in your portfolio and the sort of stuff that you're buying. But what do you guys do for a living, you and husband? What sort of work is it in general?
Yeah, just in finance and in retail.
Okay, that's cool. So why property then? What sort of made you guys start thinking about investing?
We thought we should start investing our money. We wanted to make sure that we set ourselves up and our family up for the future. And I've always been interested in property, just never really done anything about it. And we thought, well, let's give it a go. I'm not much of a shares person, neither is my husband, so we're not sure. And, in terms of other avenues, weren't really interested in that. So property was our main goal. And that's how we got into it.
And you said one of your goals is to potentially make property full-time, so that's cool. Manage your own portfolio, sounds like a good job. What is the goal, like the sort of the wider goal of property? Do you want to be able to retire at some point with a passive income from your properties? Is that the idea?
Definitely, yes. So when we started, we thought, well, what was that goal? How long and what did we want to, I guess, retire on? And that's how we sort of looked at, well, how many properties does that mean? What does that look like? And at what point do we say, well, we've now got what we need and now we can look at how we, I guess, finish on a good note.
Yeah. And your retirement plans, is that a particular age that you want to have the choice that you don't actually have to go to the work every day?
Yeah, I think either my husband and I are by 50.
Yeah, okay.
So it's not far. 9 years.
I imagine some
yes.
way away. But, that's cool. So within 9 years, so by 50, that you actually have the option to say, you know what, that's it. We choose now to work rather than we need to work.
Exactly.
Yeah.
So if one of us can step away from our full-time, I guess, employers, that would be great. That would be really good.
And therefore, do you have like a sort of asset size that you need to be controlling in terms of property in order to achieve that? Do you know what that number is?
With number 7, we're there.
Okay.
I don't think I could stop though.
You just now got to pay down a debt, right? But,
That's right.
Yeah.
It becomes very addictive. I just love the process throughout the whole 3 years that we've been doing it. I'm more active than my husband. So for me, it's a real passion. So I think if I get more, I don't know, I just want to keep going. I don't want to sort of stop. I don't know what that looks like, but
it's quite funny. So are you invested in the process and doing it rather than what it's going to do for you? Like at the moment, that's what you're in, that headspace you're in. You just know that'll sort itself out, but you like doing it.
Yeah, definitely. We're in a good spot now where I'm comfortable that we'll get there. And now I'm just enjoying the process and wanting to do a lot more of it. So if I could leave today my job, I would.
So what is it about the process that you like? Is it the fact that you have control, you get to make decisions, you're the master of your own domain? What is it? What is it that you go, yeah, I really like doing that bit?
Yeah, it's all of those. My goal is to own my own business.
Okay.
And I think property is probably where I see myself.
Well, the thing is that with I guess 6, nearly 7 properties, you are in business and you're in the business of running a property portfolio. Can you give us some indication of what's the total top line number in terms of value of your 7 properties once this last one settles? How big that will be? It's a long pause. We can
just doing a bit of calculations in the head.
Yeah.
A good amount.
A good amount. Okay.
Yeah.
Yeah, it's not bad.
It's not bad. It's not bad.
And what sort of LVR do you operate at? Are you sort of quite highly leveraged, or is it at a point that you're quite comfortable with?
Comfortable. So we do invest in SMSF as well as outside of SMSF. So that's helped us quite a bit in terms of that, and very comfortable. So we do have some capacity to go a bit more, but we just need to sort of let this one settle and see how we go. I think we did 2. We only just settled 1 and settling this one. So doing 2 at the same time was kind of a bit
daunting. But
it was a bit daunting. It's just a lot. You want to make sure that you're replying to the right people about the right property. So
why are you going so fast? Are you just trying to sort of get to an asset base and then you can start looking at paying down that debt over time?
Because we looked at the age of 50. That's the age that we thought would be a good time for one of us to sort of step back. We wanted to, and we started, for me, I think we started a bit too late. So 3 years, I would have loved to have started earlier.
3 years earlier?
3 years earlier. But because we were able to do it, we just kept going because I loved it. So just kept going.
Has anyone worked with you guys to actually understand what these goals or vision is? Have you used an advisor to help you do that?
I've got a great team behind me. My broker, buyer's agent, accountant, financial advisor.
And they all see the world the same way?
Solicitors, yes.
Yeah? Is your financial advisor property orientated, or are they a stocks and shares and bonds type person? Obviously it must be property, but yeah.
Property, everyone's property.
Yeah.
So one of the things that someone told me before I started was never take advice from someone that is not doing it. And that's so true. I did try someone that didn't, and you just see the difference. You can really tell the difference between someone that's doing it and not doing it.
Most financial advisors don't normally get into property because the cynics would say that because they don't generally make an ongoing annuity income off performance of stocks and shares or whatever. There are some very good financial planners out there that do have a property bent, and if you're going to see a financial planner who is only recommending one particular type of investments, you've got to start questioning that. Obviously you should have a diversified and balanced portfolio and some stocks and shares in and out of super and all this sort of stuff, but if you get sold something from a financial planner, it's probably maybe not the right advice. But anyway, it's time for a different podcast. So let's have a chat through your portfolio. So you're settling now on the 7th one. What was the first property that you bought?
It was a house.
Okay. Whereabouts was it?
Victoria, Whittington, Victoria.
Okay. And what was the property after that?
Queensland.
Okay. Whereabouts was it?
Leichhardt.
And then following that, this is over 3 years. So
over 3 years.
Into the memory bank.
Tapping into the memory bank in Queensland again. So we've got quite a few in Queensland.
Okay. Whereabouts was the third one in Queensland?
Woodridge.
Woodridge. Okay. Good old Woodridge. Yeah, I've got a place in Woodridge. The fourth property.
So Queensland.
Queensland again, whereabouts?
Marsden.
Okay.
I think I'm getting these in the right order, but that's
maybe.
okay. We'll get
close
we'll
enough. The fifth one?
in Belmy.
And the second last one?
Leichhardt again.
Leichhardt again, Queensland Leichhardt. And you're settling now, is that up in
Yes,
Queensland
South
again?
Australia.
South Australia,
In
okay.
Jocelyn.
Okay, cool. And what sort of price point are you buying? Are they all around the sort of same level?
Around the same, I think. Not. I don't want to stretch it too much in terms of looking at cash flow and long-term growth. The properties that we've bought are around the same price point.
And they're all in the, like Logan, etc. They're all sort of the affordable belts where there should be plenty of people, hopefully they're renting at places. And how do you manage your portfolio? Do you have property managers for each of them?
Yes,
okay.
for each of them.
And does that work for you?
Yes.
Yeah, okay. So what for people who don't use a property manager, what would you say the benefits of using one is for you?
It really is the time and also the locations, I don't live in those suburbs.
Yeah.
So having a property manager in those suburbs around those properties that know the area, that know the tradesmen, that know the ins and outs of managing a property is definitely a positive for us to be able to use them. Without them, we wouldn't be able to do it. Working full-time and needing to grow our portfolio, not having that support, we definitely wouldn't be where we are today.
Yeah, you don't want to be running up if you live in New South Wales.
Yes.
Yeah, the Queensland to get washers changed. It sounds like an absolute nightmare. So, any negatives though? Has your experience dealing with property managers been a good one, or do you have any frustrations with them?
I wouldn't say frustrations. I guess having to pay them would be one. But other than that, look, I have to say I've been very lucky with the property managers that we have. It's definitely been a very positive experience. Never really had any issues. Probably had one issue with one that came with the property, but we changed.
Okay.
So we ended up using our own. So.
And do you have sort of similar people managing these properties? Like, one office has 3 properties.
Yes.
Managing. Okay.
Where we can, we try and stick with the same people.
One. And what's been, when you look back at your 3 years investing, what's been your biggest headache so far? The stuff that's just been a pain to look after for you?
The paperwork.
The
Just keeping up to date with your numbers. I didn't for the first year. Come tax time, it was a nightmare.
Yeah, trying to get it all together.
I felt sorry for the accountant, but he was very patient, so I'm very lucky with that. But yeah, you just really need to keep on top of your numbers, and it's just really important that you know what's happening with all your properties. And my one piece of advice is that you need to, it's not something you can set and forget, even though you think the property is a set and forget property. You really need to be active as much as you can weekly to be able to say, okay, is everything up to date? Have I accounted for everything?
And most property investors in Australia only have 1, if 2 properties. So at 7, you're definitely the minority. How do you keep track of your portfolio? Do you have like a spreadsheet that you've made or something like that? How do you do it?
Spreadsheet.
What sort of stuff do you measure on your spreadsheet?
Just everything, I guess, from purchase price to loan amount to LVR to interest rates to rent. If anything changes, I guess from the rent perspective, interest rates, you keep that up to date, repairs, bills. So one thing that we learnt to do early on was to actually move all the payments of bills to the property managers. So that's been a great help. That's a good
idea. I used to, when I started investing, I used to try and do it myself so I can keep an eye on stuff. But, just get your property manager to pay your council rates and your water rates and everything else, because it's a headache you just don't need. And then you just get a nice net amount in your statement. Obviously, you don't get the benefits of cash flow, so you're not getting all that money and then you're paying it down. But I think for the sake of ease of administration and empowering people to do what they should be doing, it's a really, really good point. That is there any way that you think you need to refine the way you're managing your portfolio from an admin perspective, or you'll just keep evolving it as you go?
Yeah, just keep evolving it as I go. Time is the main thing, really dedicating time.
And how do you find that time? Do you sort of allocate an hour or whenever a week, or do you do it on a particular day, or is it just when you get around to it?
I like to do it when I get my statements. So if any bills have been paid, I get my statements from the property managers that has everything that they've paid. So every time I get that, so it's either fortnightly or monthly. And I guess with 7 properties, you're getting a statement every week from someone. So pretty much every week. No specific time. It's just when I do have the time, I block it out and focus on that. Yeah.
And what sort of keeps you awake about your portfolio? Like if you're lying in bed going, I'm worried about X or Y, what would they be?
Just if the property market crashes.
Are you concerned about that?
Sometimes, you do understand that there's peaks and troughs, and you need to sort of ride that flow and not worry about it too much. But yeah, it's just not knowing what's going to happen in the future and how that's going to impact your situation.
And are you prepared should that happen? If by crashing, what does that mean? Does that mean that you're not going to have anyone renting your properties, or crashing means that you lose 20% of the value of your properties? Like, how would you react to that?
It's the values of the properties. At the moment, where if that was to happen, we are in a good position to be able to survive. And I guess vacancies, that happens now and again anyway. So, we've accounted for that too. It is really just not knowing what's going to happen in the future and what that looks like for the properties that we currently have or want to get in the future.
And do you feel as though where you've purchased these properties, acquired these properties, they're in obviously growth markets? Is that where you've been buying on the basis of the fact that you're looking for growth rather than yield, or you're obviously trying to get both of them? But if you're going to say, I want to run my portfolio as neutral as possible versus not getting as much growth or heaps of growth in a negative portfolio, where do you sit in that regards?
If I think about the goal that we want, we're definitely looking at capital growth, not so much the cash flow at the moment. I mean, we'd like it to be positive as much as possible, but for us it's capital growth and knowing that in the future we're going to be set up for success rather than for the now.
So you said that, if you stop at 7 properties, if you don't do anything for 10 years, the idea is that property doubles in value between every 8 and 12 years. So, you keep the same level of debt, but your properties double in value. That's when you start seeing the effects of capital growth, and that should change your cash flow position somewhat, because over a 10-year period, you think your rent should be going up as well at the same time, right?
That's right, yes.
Yeah. And has every property you purchased been a house, or have you been buying units as well, or townhouses?
I've had one unit, and we're settling on the second unit.
Okay. And you happy with units versus houses? Any concerns with buying units over houses?
Probably the units with the strata management. That's probably the only thing with units. But other than that, I don't really have a preference. It's whatever's going to be a good investment.
Do what you need it to do.
Yeah, that's right.
And how are you guys going with finance at the moment? Obviously, a lot of people are struggling to try and secure financing. Banks have tightened up considerably. How are you finding it? Have you, over those 3 years, has it changed? It got harder to get finance for you guys?
Through the SMSF, it has. Not so much harder to get the approval, just it's the interest rates are a lot higher. In saying that, it's we haven't been looking at properties with large purchase prices.
Yeah, okay.
So I think that helps as well, is not going for too much from a loan approval point of view, and that's helped us a bit. So at this stage, we haven't really had any issues with obtaining finance. I would imagine that after settling this one, we will start
tightening up a little bit.
That's right.
And over the 3 years, you've acquired 7 properties, which is pretty speedy. How have you financed the deposit for each of those different properties? Are you drawing down on the equity in the properties that you have and recycling that into the next property, or using cash each time that you've saved? Using
cash each time. One of the things we did when we set up was taking out a line of credit, just being able to use that as our basis. With SMSF, you're using your super. Yeah.
How many properties sit within your SMSF versus outside? 4. Okay. Wow. So you got 4. So over half your portfolio sits within your SMSF.
Yes.
And I imagine your financial advisor / accountant is being very proactive in making sure that you make maximum super contributions. Has that been their advice?
Yes.
Yeah. It's something worth exploring with your accountant or your financial advisor, the benefits of putting maximum super contributions in. They reckon that it's one of the best tax effective structures to invest in. It's not my job to give you, or my position to give you any advice on this, but it's well worthwhile having that conversation with your accountant or financial planner around the benefits of investing in super versus outside of super, and what the maximum contributions you can put into your super fund every single year to make sure that you can either acquire property within your super fund or at least maintain it through contributions moving forward, and sometimes a bit of both. But so that's been a reasonable experience for you, the management of your super fund. Has it been hard work? All the auditing and all this sort of stuff?
The auditing, but when you're on top of all your numbers and your documents, that really helps at audit time. And we're not getting any more in our super. 4 is our maximum.
Okay.
So we will leave it at that and look at other ways, I guess, diversifying our portfolio.
Outside. And the stuff that you've bought outside of your super fund, have you bought that in sort of the personal names of yourself and your husband rather than in a trust and stuff? Okay.
That's right, yes.
Which is the most cost-effective way to invest. I talk about a lot when we look at our portfolio on the Smart Property Investment Show. We invest in trust structure, which comes with its associated costs and sometimes headaches. But That's cool. So what next then? So you settle on this property and then you're going to get itchy feet and want to keep buying?
Probably, yes. Definitely need a few months off.
Yeah.
It is taxing on the time and energy, especially with the support team that you have around you. It's also taxing on them as well.
Is it you pushing your team, or is it your team pushing you sometimes to understanding what your goals are and helping you realise those goals?
Us, we are.
Okay, so you drive those.
We have to. It's our money. It's our future. We need to be in control and we need to drive that. They're definitely there to support whenever we need them. Definitely there to give us the right advice. But it is us that we drive it.
Yeah, you are. Do they like you, or do they go,
well, I don't know. You'll have to ask them.
I imagine you're a good client. And obviously investing in your super fund, there is certain requirements around that in terms of adding value, borrowing against it within your super fund. You're obviously a lot more flexible investing outside of your super fund. Have you done any sort of major renovations in any of your properties, or what sort of properties are you acquiring? Is it stuff which is easy, doesn't need any work, or you look for stuff that you can manufacture equity in?
We haven't had any renovations yet.
Okay.
We are looking for ones we have looked for ones that we don't require too much work in. One of our properties we're looking at potential development on.
At a point in time?
At a point in time. Probably our next thing, as opposed to getting another property, is looking at, maybe the development.
Okay. Would that be like a knockdown,
aspect.
Rebuild type of thing, or?
Maybe subdivision, put a granny flat.
Cool.
So, yeah.
Well, that's going to keep you busy.
That's right. So
that's pretty exciting.
We need to weigh up what it is that we want to do. And, if I could do both, I definitely would do both. But
you'll enjoy the process of doing a build, because then if you're building a place, there's lots of decisions and choices to make. I guess the challenge is that, you just want it to be as cost effective as possible to suit the market as best as possible, so you get the biggest bang for your buck with spending the least amount of time and effort to sort it out. So speaking with a lot of investors, they like the idea of developing, but then once they do it, a question I was always asked, what would you do differently? They typically always go, I probably shouldn't have got as involved as what I should have. So let the experts do what they do and give them the guidance and direction, but don't meddle too much. Yes. And when you start changing stuff is when things start going up in cost. But that's cool, Rita. Well, thanks for sharing your story. I like the fact that you're a bit cagey with some of the ins and outs of it, and every investor is different, and that's cool. A lot of investors I speak to will tell all and sundry what they're doing, and every barbecue they're at, what people should be doing and why they should be doing it. But which, most of the investors we get on the show are typically, they're pretty sophisticated and know what's going on, and their thought process is pretty good. But my advice is that if you meet someone at the barbecue and they're telling you to buy this, that and the other, and they're an expert, often they're probably not. So it's the ones that don't say much are the ones who are normally doing the best way. So I really appreciate you coming in and let us know what you're up to. When you go down this path of this development, we'll have to get you back on, and I'll grill you on some numbers. You can give you some numbers then. So, but no, it's good, and thanks for coming on.
Thank you.
Remember to check out smartpropertyinvestment.com.au. If you're not subscribing to our daily morning market intelligence, so you're the first to know what's happening in property right across Australia, and potentially give you some intel on what you may or should be doing, smartpropertyinvestment.com.au/subscribe. If you like getting your info on social media, just search us on LinkedIn, Facebook, Twitter, all those good platforms. Just search Smart Property HQ, track us down, you'll like us, and know what we're up to. We're going to do a Q&A session pretty soon, so if there's anything you would like to know or any questions you'd like to ask about any of our commentary from our guests or our portfolio, we're happy to answer them. Email the team, editor@smartpropertyinvestment.com.au. And as always, please keep those reviews coming in iTunes. We do appreciate them. It's nice to know that we are adding and providing something of value to the community of property investors right across Australia. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.